Welcome to today's Debrief Tax webcast series in Asia Pacific. Our webcast today is from our corporate income tax series and is titled E-invoicing compliance for APAC businesses, how to prepare for the upcoming changes. My name is Richard McKender. I'm a tax partner based in Deloitte, Singapore. I have the pleasure of hosting today's webcast. I have three speakers with me today, Haryati Hamza, Nazar Paradivsky, and Bertrand Gauche. Haryati is also a tax partner based in Deloitte, Singapore. Nazar is the Vice President of Regulatory Affairs at Pagero, and Bertrand is the Managing Director for ANZ for Pagero. If you want more information on our backgrounds, you can access our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I'd like to first introduce some of the highlights of the webcast console. First of all users are on listen-only mode. If you have any content-related questions, you can submit those at any time in the Q&A box at the bottom right of the screen. We will do our best to respond to your questions during the presentation. Second, all PC users can maximize or minimize the boxes at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Downloads and Links box. On the other hand, mobile device users can view the slides and answer the survey on screen. Thirdly, if you require an attendance record for this event, you will receive an automated email with CPE after watching for 50 minutes. Now, let's move to the agenda, and let me give you an overview of the scope of the topics we're going to cover. So we'd like to look at the global regulatory landscape for e-invoicing. Then we'll move on and look more closely to home and cover off what's going on in Asia Pacific and focus in on a few countries in the region. Then, to bring everything together, we will spend some time looking at how to prepare for the changes that we have highlighted in the earlier sections. Now, moving to the next slide. As I mentioned, we're today joined by Pagero, an alliance partner of Deloitte. I would like to ask Bertrand to just spend a few minutes introducing Pagero in a bit more detail.
Thank you, Richard. I'll very briefly introduce the Pagero network, and we'll then cover many other aspects, of course, as we go through the presentation. In a nutshell, Pagero provides a smart business network that connects buyers and sellers for automated and compliant exchange of invoices and other document types. So what organizations receive by connecting to the Pagero network can be broken down into two main streams. On the one hand, of course, compliance with all e-invoicing models, PayPal being one of them, but there are many others. And bear with us on this because today we'll cover some of the other key models out there in the market of interest for today's presentation. On the other hand, Pagero brings capabilities to automate account receivable and account payable processes from a business operations standpoint, which is important, of course, for finance, for support, for revenue generating functions. All of this clearly resides besides the compliance piece, but it is simply embedded in the Pagero network, not just an additional bolt-on process. That's a significant advantage of the network because it includes all of these capabilities to interoperate with other networks, connect via portals, interchange with pre-existing EDI solutions that your trading partner may be using today, all the way to semi-analog methods such as email distribution, printing, data capture, essentially covering the entire spectrum of possible connectivity methods for your buying and your selling processes. Next slide, please, Richard. So, over the last 15 years or so, Pagero has been truly focused on a global footprint in the development of its network. So today, by connecting via Pagero, one gets instant connectivity to over 90,000 other businesses on the network. but also a reach of more than 12 million businesses in more than 140 countries. I want to flag that earlier this year, Pagero became part of the Thomson Reuters group, who specialize in tax compliance and tax determination solutions. So now, under the Thomson Reuters banner, and jointly with our key partners such as Deloitte, we can provide a full end-to-end solution to address all aspects of business to government and business to business regulatory requirements around the world. We would like to touch on some of those various regulatory requirements in more detail. So now I'll hand over back to you, Richard, and we're going to lift the hood on that. Thank you.
Thank you, Bertrand, for that quick introduction. Let's, as Bertrand just mentioned, move on to look at the global landscape. Harry,
So thank you, Richard, for that quick introduction. Let's discuss a lot more on the growing global mandates around e-invoicing. So why now and why we are seeing a lot more lights kind of like focusing on the e-invoicing? We've seen there's a growing e-invoice mandate globally. It started from the South America and then it moved closer to home, which is in India, China, and also now we can see it being expanded to a lot of other jurisdictions in Asia Pacific. So one of the reasons that we've seen the government worldwide adopting e-invoice and also e-reporting is mainly to reduce the tax gap. Nevertheless, even though it's just focusing on the tax gap, a lot of those are around the automation of the transaction or the business process who want to focus on embarking on their ERP journey. We've seen that there's a lot of countries now require digital reporting with a different timeline. We have mentioned earlier that the Latin America has started a long time ago. It's probably a lot longer than the Asia Pacific region. So we're expecting around 2030, it's expected that almost all countries, and there is shine maybe in green and also in blue, they'll be all incorporated electronic reporting into their tax system, right? The automation or the e-invoicing journey will then eventually will end up on the automation of the pre-filled tax return and controls, which also enabling much more of the cross-check and also increase the transparency within the tax authority and the taxpayer. And then within that, I'm going to pass over to Nazar, who will talk much more in detail about e-invoicing and what exactly is e-invoicing.
Thank you, Ariati. And I think it is important to really continue the introductions as e-invoicing. Obviously, the way it has been implemented in different countries varies, but it is indeed in essence some countries who try to primarily combat the VAT gap or indirect tax gap they have in their countries, whereas other jurisdictions and tax administrations, they would like to drive overall digitization. There is one common denominator, one of many common denominators, irrespective of the e-invoicing mandate drivers, and that is the fact it's the definition of what e-invoice is. And from our experience, when we talk to many businesses globally and in Asia Pacific region in particular, we often hear the comment from companies, we already do electronic invoicing because we can generate a PDF and distribute it by email, or we are already using OCR technology to scan PDF or even paper invoices. However, That is not an electronic invoice because a PDF or similar files is unstructured data from technical perspective, basically meaning that a machine cannot automatically receive and process this information. It will require some intermediate technology or even manual intervention to process this data. And so only structured or XML data can be considered electronic invoice in the current state. If we go to the next slide, I will as well introduce a new term that is widely used in the industry, and obviously many times, even throughout this presentation, we will be referring to e-invoicing and e-invoicing mandates. However, as a little bit of a heads up, maybe for the audience, you will more and more in the future be hearing the term continuous transaction controls, or CTC. And why is that? What is CTC? It is basically real-time controls that are implemented by the government when it comes to indirect tax control or indirect tax management. However, why we, especially looking on countries who have had real-time mandates for a couple of years, why we no longer only talk about e-invoicing mandate, it's because historically, invoice is the first document and that the tax authorities regulate. However, as time goes by and governments learn out of the transactional real-time data they are collecting, they start requesting more documents, more transactions from businesses to be reported to them. And these examples include invoice response, so a message from the buyer, whether they approve, reject, or dispute the received invoice, information on payments, whether payments has been done or payment has been received, information on transportation documents, information on electronic orders. And that's why in the industry, we typically talk about transaction controls and not only invoicing mandates. And in a nutshell, irrespective of which approach or which transaction has been regulated in the industry, the outcome is that the retroactive audits in those jurisdictions, they become basically redundant. So the tax administrations will not be going back to business maybe 1 year or 2 years later and asking to provide additional information, but instead they will be able to perform their monitoring, their checks, and even audits in real time. And we see that already happening in many countries in Latin America and in Europe, where businesses could get basically online invite to explain 1 or 2 or 3 transactions if there is any kind of deviations or questions from the tax administration. If we go to the next slide, as I already mentioned, different countries, they have decided to implement e-invoicing and CTC mandates differently. Obviously, as well, each implementation is unique when you start looking on technical specifications, on details. However, if you try to generalize, and especially important from a business perspective, to understand how you orchestrate your processes, how you define and design your systems, what teams or departments in your organization will be impacted by the CTC mandate, it is important operationally to understand how will be the orchestration. So basically in which order and how you do things in the specific model. And so if we go from left to right, first, we talk about the four-corner model. It is as well referred to as interoperability approach, and PEPL is a good example of it. because it already is deployed in more than 20 countries. But there is countries such as Finland or Switzerland who have their domestic proprietary four-corner setups. In this model, the real-time communication component with the tax administration does not exist. However, invoicing must be done electronically. Invoice must be issued in a predefined format, exchanged in a predefined structured format, received and processed as an electronic invoice. This model already has validations embedded into it, but as I said, no real-time communication with the government. However, the government can receive the data in those predefined formats for audit purposes. Second approach is the real-time reporting model, and here the invoice isn't necessarily regulated at all. However, typically the supplier will have the obligation to report either the full invoice or subset of it to the tax administration in predefined period of time. And there we have as well deviations between, let's say in Hungary, it has to be instant. In other countries, it has to be 24 hours, if I remember correctly. For South Korea, it's 72 hours. Next model, in the middle, we have clearance, and that is the predominant model in Latin America. But it as well can be seen in Saudi Arabia, and it as well can be seen, for instance, and Haryati will talk more about it, Malaysia and some countries in Asia Pacific region. And under this model, basically the supplier has to first submit the invoice to the tax administration, get it validated by the tax office, and only then they will exchange the invoice to the buyer. And then the buyer will have an option or an obligation, depending on the country, that to validate the invoice again with the government. Fourth model is referred to as centralized exchange model, and unlike the clearance model, the government will as well act as the exchange hub for electronic invoices. So exchanging an invoice between the supplier and the buyer is prohibited in that jurisdiction. And there's a handful of countries applying this model, especially in Europe and in Turkey. The new model, which we see rising in many jurisdictions, is the five-corner model, sometimes as well referred to as PEPL CTC model. The most recent announcements are Singapore, UAE, and Belgium, who will adopt this approach. It basically builds on the four-corner model, but then the service providers who perform, similarly to the four-corner model, who perform the validation of invoices, dispatch advices, they will be responsible for reporting this information to the tax administration, so to minimize the burden on the suppliers and the buyers in the jurisdiction. And in the end, we have the hybrid approach, so to say, which is combining the centralized model and the five-corner model. It's not yet deployed in any country. However, France and Spain are set to be the first countries with the hybrid approach. If we proceed to the next slide to give you a bit of a flavor where we are heading, and without talking about any specific country or a flag on this slide, the CTC mandates, e-invoicing mandates, it's a global trend. We see countries in Asia Pacific region, Middle East, in Africa, in Europe, but even still in Latin America, rolling out CTC mandates. There's a lot of flags, as you can as well see, for 2024-25 And you might think, well, there isn't so much for 26, 7 or 8. And that is because the governments usually go out with their announcements maybe a year or two before they start implementing a CTC mandate. Now, you might think, well, that's too short time frame for a business to get adopted to these approaches. And yes, it is very short time frames, and that is putting the emphasis on the businesses to start preparing for these mandates rather sooner than later, put in place processes, skills, technologies, foreseeing that a mandate will be coming, even for those countries who haven't yet announced something, because it's easier to prepare for something versus a scenario where you have 5 or 6 imminent CTC mandates that you have to cope with simultaneously. If we go to the next slide, so we very often talk about what is coming, new mandates and another mandate and a new mandate. But what is even more important is to stay updated on existing systems, on existing e-invoicing and CTC and indirect tax requirements. And so we as well see quite significant number of different notifications and publications coming out of different jurisdictions, once again on a global scale. And as a business, you need to ask yourself a question, am I equipped to stay updated with all these notifications, to interpret them? Is there an actual change which will have impact on my systems and my processes? Or is this a heads up and forewarning from a government for me to start preparing for something? And finally, do I have agile and flexible and future-proof solutions and systems in place that can actually implement the necessary changes in time and frictionless, so I don't have to do all the work to remain compliant with these obligations? If we then proceed and look on some regions where they are heading and what are developments, we will start with Europe, and you'll see that there is, if we can go to the next slide, please. Thank you. You can see that in Europe, the state is very much diverse. We have a good number of countries that have already implemented CTC e-invoicing mandates in law or in de facto. So good examples would be Finland and Norway, where without a mandate from the government, they have achieved 80 to 90% adoption rate on electronic invoices throughout all economy, because the businesses realize the value of digitization. You have a number of countries in the light green color over here, which are planning to shortly introduce CTC mandates, and a number of countries that recently have implemented or are implementing a CTC mandate as we speak. So really, really a lot of developments. But what is even more important in the context of EU is VIDA, VAT in the digital age, which is set to transform and digitize European economies and businesses. In the step 1, to digitize everyone, and in step 2, to introduce real-time controls, so basically a CTC throughout the European Union to harmonize regulations. You might ask, well, is this a pure EU phenomena, VIDA? By law, it is, but in reality, we already see that VIDA starts impacting businesses and jurisdictions outside of the EU. 2 examples of this are the VIDA pilot that is being conducted in Northern Europe, which as well includes Norway and Iceland, which are not EU member states. And as far as some 2 weeks ago, there was a joint declaration by the US and EU on interoperability to make sure that the US businesses stay tuned and don't fall back too much from European businesses in terms of digitization of invoices and supply chain processes. And so a small prediction from our side would be that VIDA will have impact on other jurisdictions outside of EU as well. If we proceed to our next region, and that is the Middle East, and obviously a main accent we are hearing from the Middle East is that many of these countries have recently introduced VAT as they are trying to diversify the income and move away from oil or gas revenues for the government. Some of these jurisdictions are still in process of introducing VAT, and so for them, they would like to prevent VAT gap arising in these countries. And so they are proactively introducing or considering to introduce CTC mandates. We have already a number of countries such as Egypt who have introduced CTC mandate. Jordan, Saudi Arabia, and Israel are introducing e-invoicing mandate as we speak. And then we are hearing as well a lot of information from UAE, from Bahrain, from Qatar, Pakistan, that they will be introducing a CTC mandate. And the final region I will cover is Latin America. We have already referred to it a couple of times, that they have introduced, they have been the pioneers of introducing CTC and e-invoicing mandates, especially Mexico and Chile, who have started some 10, 15 years ago. If we can go to the next slide, please. Thank you. And so looking at the color schema, most of the region is already dark green in the sense that these countries have introduced e-invoicing mandates. And what is interesting to derive out of this context is typically all of these countries have started with regulating B2B transactions initially, and they have saved, let's say, B2C transactions until a later scope. And that is what we are observing now. Many of them are extending their CTC mandates by introducing B2C or by introducing dispatch advices or invoice responses or payments, as the governments have learned already how to work with invoices, with B2B, specifically invoices. And as well, this is the region where we see the most intense changes to the mandates. And here I specifically maybe will call out Mexico and Brazil, who only this year have published around 20 updates each to the technical specifications. And thus, I guess everyone in the audience should as well note, maybe this will be as well the state in other countries that are right now introducing a CTC mandate, that maintenance will be a key question going forward. Richard, over to you.
Thanks, Nazar. That's a really interesting dive through what's going on in the rest of the world. And you know, there were 2 points that I took away from that you summarized quite nicely at the end. So the first is around the fact that you know, the initiatives, especially we see in Europe, are likely to become more widespread and global. And even if they don't, then the businesses that are outbound from our region into other regions, then they need to be aware of those mandates and how to deal with them when they you know, when they get there. And the second point is, even once you've gone live, that's not the end of the story, and you can't sit back and relax, put your feet up, and assume everything's going to run. You've got to stay on top of all these changes, because governments do update the rules and move things along, and therefore it's not a done deal once you've implemented. So very key points I think for us to remember as we go through the rest of the session, particularly the what's next bit towards the end. But let's move now and look at the regions. If we move to the next slide, Haryati, over to you. What's happening in Asia?
Thanks, Richard. So Asia is unique, actually, in its own perspective. Just now, Nazar talked about the European, which are much more consistent or harmonized in the approach of e-invoicing. Because, and also, for the Asia Pacific, when we look at it, it's a bit of a mixed approach that we've seen in Asia Pacific, because we've seen what we call a four-corner model approach, which is typically adopted by the likes of Australia and New Zealand, as well as, Singapore. But Singapore, again, is moving into the five-corner model, which is with the recent announcement. And then also with the rest of the tax authority, they are much more leaning towards what we call clearance model. And then there's a reason for it. So if you see on the left-hand side, it just talks about the different model adopted by different countries in Asia Pacific, and also whether their adoption, is it only focusing on the B2G only, or is it only on B2G and B2B, or is it also include B2B, B2G, as well as B2C, and then whether it is mandatory versus voluntary. So you can see the landscape in Asia Pacific is kind of like unique, and it's almost what we can say is non-harmonized, because every country actually has its unique challenges that they're trying to address. And those are driven, if you look towards the right-hand side, they are kind of like quite obvious, the way that Asia Pacific as a region addressing those e-invoicing. What we've seen is that the timeline is quite aggressive for the new mandate. So you've seen with the recent country, Malaysia, which we're going to deep dive before, which actually look at the taxpayer need to be looking at to be mandated from the 1st of August. And also recently we talk about Philippines, and then now it's going on pause. We can see a lot of those countries actually trying to be aggressive, but some of them actually now re-look back again at their timeline of introducing e-invoice. The hard clearance model is, or the clearance model is what we see in majority of the countries in Asia Pacific are adopting. And the one thing that we understand around the clearance model is that there's no standard. There's no standard clearance model. It's unlike PEPAL. Basically, that means clearance model is being set up by each of the authorities in that jurisdiction. Then it's a unique and complex landscape in each country to implement. It's almost like a localized schema model, a localized requirement. So everything is kind of like more of a country by country. So a lot of those countries as well in Asia Pacific is moving to what we call a real-time reporting, because they want to populate or repopulate the tax return and the reporting. So that they can actually look at the pre-populated tax return for indirects and directs. And then at the end of the day, the taxpayer, what they have to do is log in into the tax system, just review for those pre-populated tax return, anything that can be manually amended. There's a separate box for that, and that's where the tax authority are looking at it, what we call to actually set the starting point for the audit later. And then also the other part that we see is that because of those clearance model, that means they're actually a bit more governed by the tax authorities. They're only allowing, some of the countries are only allowing certain provider or the taxpayer to certain provider, service provider to link and provide those direct connection to the taxpayer. They have to be certified, or they actually have to meet a certain criteria before they can actually assist the taxpayer to provide and send the e-invoices. There's a lot of governance, there's a lot of requirement around this certification by the service provider. And lastly, but not the least, because of those clearance countries, they're actually now introducing penalties as part of the mandate. And there's a harsh penalties if it's non-compliance. It's actually pushing the business to be mandated in terms of e-invoicing rather than voluntary. And the reason, of course, what we've seen is that those countries in this Asia Pacific jurisdiction, their main objective is to close the tax gap or close the tax leakages, and bringing the shadow economy to be a registered taxpayer, which is clearly their main objective, and not so much their secondary objective is around, of course, business efficiency and the automation and also digitalization. So now, going back into each country, if we move to the next slide, what I want to talk about is mainly around each country that is introducing those e-invoicing depending on what method. So we're going to start first by Malaysia, which is closer home. And this is where we see a lot of information that is going out in the market. So Malaysia already talked about e-invoicing last year in 2023, and then they've then adopted later towards the end of 2023 as part of the regulation, the e-invoicing. So it's mandated, it's part of what we call Income Tax Act. So Malaysia is introducing e-invoicing from the direct tax point of view. I know a lot of other jurisdictions are introducing e-invoicing from the indirect tax, but for Malaysia, it's quite unique. It'll be the direct tax is the focus. That's why you see the tax law that is governing the e-invoicing mandate in Malaysia is income tax. So there are multiple dates introducing or adoption for e-invoicing in Malaysia. We started first by May 2024, which is really just around the corner. And these are what we call a pilot. So RBM are selecting or inviting a few taxpayers to be in the pilot project. And then the next one, which is kind of like we are looking around, taxpayers with the revenue for the last audited financial statement with a revenue of more than 100 million ringgit. And those will need to go live by 1st of August. Those are actually, we're expecting around 4,000 plus large taxpayer in Malaysia to be e-invoice enabled by August 2024. Those are actually covering all those different type of transactions, B2B, B2G, and B2C. So then move to January 2025, the threshold of your sales revenue will then drop to any taxpayers that is more than 25 million ringgit per year, and then eventually 1st of July 2025 that they bring in all the taxpayers irrespective of your revenue threshold. So I've explained before that Malaysia e-invoicing covering transaction whether it's B2G, B2B, as well as B2C, and it's around centralized pre-clearance model, which is by the tax authorities. That means you need to send your invoice first to the tax authorities. It needs to be pre-validated. And then the government or the tax authority will send you with the QR code and the ID before you send it over to your customer. And then the Malaysia Tax Authority, LHDN, will also have developed their own My Invoice portal for anyone that is issuing manually, but it's also accessible to all the taxpayers, but mainly targeting for small to medium size. There'll be a large automated API transaction for the large taxpayers. We're talking about all those are being provided, all those transaction that fall under e-invoice mandate, and as well as the software development kit has already been published by the LHDN, but keep in mind that these are still evolving. So that's just a quick tour around Malaysia. I'll pass it over to Nazar, who will talk about the rest of the jurisdiction. Over to you, Nazar.
Thank you, Haryati. So I'll briefly cover two countries. It's Singapore and Japan before handing over to Bertrand, who will talk on Australia and New Zealand. And I see we have a couple of questions on Singapore, Australia. So we'll try to embed them into our walkthrough. As we will distribute the slides afterwards, you will be able to read what is written here. And I will, for Singapore perspective, we'll cover on focus on a few aspects that are crucial from sort of an operational perspective. And the first one is that Singapore is migrating as well technical specifications, and surprise, surprise, as we indicated initially, if there is an e-invoicing framework, it will never be permanent. There will be changes. And so Singapore is doing already the migration from PEPL-BIS to PEPL-BINT specifications. And this will be the foundation for future developments in Singapore when it comes to e-invoicing. So the first change is that it coincides with one of the questions about the B2G invoicing. So B2G PEPL PINT will become the default in Singapore. There will be more details announced around this, but basically the manual portal option, which exists today in Singapore, will be phased out. And so businesses will have to be leveraging the Invoice Now, or which is basically PEPL. They will have to leverage the Invoice Now framework to exchange B2G invoices digitally. Now, the most recent development in Singapore is that they will be, along with some countries, as I mentioned before, UAE, Belgium, and a couple of other countries in the EU, they will be rolling out a 5-corner model, which is based on PEPL specifications. And the main idea is to actually not only digitize the Singaporean economy, but as well to make it more open in the global and accessible in the global supply chain. And so starting from May 2025, so in 1 year's time, businesses will be able to voluntarily opt into the 5-corner model. And then starting from 1st of November 2025, it will become mandatory for newly incorporated entities that register for GST voluntarily in Singapore. And from 1st of April 26, all newly GST registered businesses in Singapore will have to be under the 5-corner model, which will then fuel the adoption of the model across other businesses. And like Hayati already mentioned, Singapore will have a similar approach. So a business in Singapore will have to use Invoice Now ready solutions in order to communicate the data to IRS, to the Revenue Authority of Singapore. So it will be an automated process without businesses having to do any manual steps in order to enable the reporting to IRS. If we proceed to the next country I'll cover, and that is Japan. And I think what is important to mention about Japan, and there's some confusion still in the market between qualified invoice system and PEPL. So it's not the same. Qualified invoice is about having additional elements on invoice in order to be deductible under the indirect tax regulations in Japan. And it doesn't have to be in PEPL. However, the Digital Agency of Japan, which is part of Ministry of Finance, which I think is an important nuance, they are driving adoption of PEPL in Japan. So all government agencies are already enabled for PEPL B2G invoicing in Japan. As well, currently, Japan is running cross-border pilots with a number of countries in EU. Finland, Netherlands is on top of my mind, to ensure that the Japanese specifications and PEPL framework is perfectly interoperable with the European Union. And so what is our prediction on Japan is they are definitely trying to digitize the economy to make the Japanese businesses more competitive, both domestically, but as well on the international scale. And so I wouldn't be surprised if in some time there is an announcement from Japan about a countrywide adoption of PEPL, or even of the 5-corner model. And as well, there is a lot of discussions in the Asia-Pacific region in general about adopting PEPL for the cross-border traffic, including some countries that have had CTC mandates and previously, South Korea or Taiwan are two good examples where they have a domestic schema, but they are as well considering PEPL for a cross-border aspect of it to enable a smooth cross-border supply chain. I would like to hand over to Bertrand now to give us some insights on Australia and New Zealand.
Absolutely, thank you, Nassar. So in Australia and New Zealand, the framework that's been implemented is PEPL as well. This was done shortly after Singapore a few years back. Also, like in Japan and Singapore, both Australia and New Zealand have upgraded from PEPL BIS to the Pint format. So that's all in place already. Keep in mind that there are some differences in AU and NZ, namely the framework currently is voluntary, but the stance that the two authorities have taken is that they heavily encourage the utilization of PEPL across the entire market. So the framework is available, of course, for B2G transactions, but it's also available for all B2B transactions on a voluntary basis. Both countries significantly accelerated in terms of their PEPL adoption in the last couple of years. That's been done through a series of targeted engagements. I would say somewhat indirectly towards the SMB market by approaching ERP and software providers tactically and strategically from the authorities. So the likes of Xero, Mayob, and those kind of common SMB platforms are fully geared up now to work with PEPL, which really opens the market. And also directly by approaching tier one businesses and engaging the largest organizations in Australia and New Zealand, many of which are also now on PEPL or in the process of activating the framework for their operations. So all in all, businesses are really taking advantage of this to automate their account payable and account receivable finance processes. In Australia, worth noting that it's now over 130,000 business entities that are registered. All federal agencies are also available on PEPL to receive electronic invoices. And the majority of state government is set up, whilst the remainder is in the process of setting up. Worth noting that in Australia, there is a 5-day payment term for all suppliers that choose to send their invoices to government customers via PEPL. So there is a huge benefit also in terms of day sales outstanding reduction. In New Zealand, it's just over 20,000 business entities that are now registered. And government is in the process of rolling out PEPL across the entirety of the government entities and activating its utilization for both the buying side and the selling side. So accounts payable and accounts receivable, that's currently taking place over the coming months. So lots happening in Australia and New Zealand, but I'll leave it at that for now. And yeah, hand back to Hayati, I believe, to explore how we can prepare for all this going forward.
Thanks, Nazar. Then thanks, Bertrand. Okay, so let's take a look at the changes and how to get ready, the sorts of things you need to think about. Hayati and Bertrand again, over to you to walk us through what we need to think about in the next few minutes.
Yep. Thanks, Richard. So I know that a lot of people, we talk about in APAC just now, majority of it, we've been focusing on the regulated or mandated, because the tax authority globally, the tax authority, especially in APAC, their mandate is around, reducing the tax leakages as well as bringing the shadow economy to be a registered taxpayer. However, there are some other additional benefit of having this e-invoicing project to the wider business. So when we talk about it, it's about improving your data quality. That is quite important to standardize your data collection, also standardize your data that is in the system. So at the end of the day, by having a good quality data, it will also enable you to do a better decision making. Right? So it means you can do slice and dice on the analytics. You can actually get a better and faster decision making to support in terms of the management. So the second part about e-invoicing is around the risk reduction. In terms of, what e-invoicing has highlighted is ensuring that we're having a good complete data at a single source of truth, which is at the very beginning of those transactions. It means if there's any error, the error can be identified at the very beginning rather than identifying as an afterwards. So the other part that we talk about, which kind of like quite relate to each other, is around automation and the cost reduction. Of course, when you talk about automation, some of it is better, automated in terms of the accounts payable side. That means, you can actually extract the data directly from either the authority or from your other counterpart, which is your buyer or your seller or the vendor, and you can automate the AP process rather than processing the paper invoices or waiting until you actually get the paper, the hard copy of the invoices. It also will help in terms of improving the cash flow. So what I want to bring is around the benefit of e-invoicing. It's of course we need to address a mandated requirement, but there are other business benefits where some of those countries actually, especially when it's adopting as a voluntary, are trying to push in terms of the benefit. So now, if you want to go to the next slide, there are actually two approaches around the e-invoicing globally. So you've seen just now Nazar talk about the e-invoicing trend from North America, South America, going to Europe, Middle East, and now APAC. So if you think about it, and you are a global multinational companies operating in multiple jurisdictions, and that means you can adopt two approaches, either the global approach or what we call a local, which is individual per country approach. Right? There's pros and cons of adopting either one of those approaches. We see by global approach, we're going to deep dive later. There's a lot more activities that you can centralize, in terms of the IT, in terms of some of the security, and also some of how you do your central coordination as well, which can be what I call cost saving in terms of those. And then, but then there's the other side, which is localization approach. That means if you do ad hoc approach country by country, all your vendor will be onboarded as when you become mandated in that country. And that can be, in terms of the cost is actually by country approach. And that means a slightly higher cost as compared to the global approach, right? So that's kind of like bringing me into the next slide. If you think about who is your service provider of your choice. Typically, we've seen companies who are adopting what we call global approach. They will have at least one or two. The max that we will have is two. And then this is when you kind of like select, in terms of Pagero, it'll be, if you we think about Pagero, it'll be a seamless integration. That means, if you have a single ERP system or multiple ERP system, it'll be integrated through a Pagero e-invoicing. Also, it will help in terms of your ERP implementation for your worldwide. Kind of like, as I mentioned earlier, will help to reduce the implementation cost if you think about it and the global approach or the global oversight rather than reactive, which is country by country. However, it will actually, we'll talk about it later in how we run about the project. What it will help you is that look forward. So basically, whatever that you're doing now in terms of the project, in terms of the governance, in terms of strategy, it will help you. If you look at the global rollout, it will help you to get future-proof as well. So as you add in all those countries, it'll be a minimal and the effort will be kind of like minor, not as major if you do country by country. So additionally, because now you have what we call a global approach, you have one or not more than two of e-invoice service provider, you can actually visualize the status of those e-invoicing in a single cockpit. So it's easy to manage and easy to track if there's any rejection, if there's any failure as well from the IT as well as a business point of view. Right. So that's kind of like the approach between the global versus the local and the benefit of adopting a global rollout rather than a local rollout. So if you move to the next slide, which is talking about the typical life cycle. On the next slide, talking about typical life cycle of e-invoicing project. So in any e-invoicing project, we've seen, it's a normal typical life cycle. We talk about phase one, which is talking about discovery and strategy. This is where it's quite important when you're adopting a global approach to actually understand what's your vision in terms of rolling it out, the strategy in terms of the global invoice rollout. Who is your service provider of choice? And then how do you address it in all other countries that will become mandated or start to adopt e-invoice, whether it is mandatory versus voluntary. So you become into the phase two once you set up your strategy, whether you want to have one or two. And then this is when you come to phase two, which is around vendor selection. So you onboard those vendor, e-invoice service provider, upfront first, together with your IT, so that as you roll out, or as each of the countries become mandated or voluntary and adopting e-invoicing, that's when you go into the implementation. And once it's implemented, this is when just now earlier Bertrand and Nazar talk about, the ongoing support and the operate. It's quite important because as we see, those e-invoicing mandate or e-invoicing being adopted in each country is not clearly just a once-off set in stone. There's going to be a lot of improvement, a lot of changes in terms of the data point being asked by the tax authority or the schema, and what are the transactions fall under e-invoice mandate or voluntary. Those are the changes. So choosing your service provider and whoever that you are going to select as the solution of choice, and then also comparing it with the country that you are operating in is quite important, because they will make sure that all those changes are being supported and released accordingly. So the next slide is really really kind of a deep dive into what I call three in the box. You can see from the left to the right, what are the detailed activities that we need to actually consider in terms of our e-invoicing rollout globally. So I'm going to pass on the next slide to Bertrand to actually talk about how Deloitte as well as Pagero work together in some of our e-invoicing projects.
Thanks, Hayati. And to help summarize some of the most important aspects that both you have covered and Nazar, really in the current regulatory context in Apac and beyond, as we touched on, again, where we're seeing a lot of change happening very quickly. I want to leave you with 5 key takeaways on the capabilities and benefits of leveraging the Pagero network as you address your compliance needs. So number one, a network like the Pagero network is there to meet your compliance requirement across all CTC models, the ones that Nazar touched on earlier. That includes B2G invoicing and all people jurisdictions as well. Number two, the network is set up as a platform that is VIDA ready. As you've heard from Nazar, that's becoming really prevalent across the whole of Europe, but it's also impacting organizations outside of Europe. So that's something that's really crucial to keep in mind and on your roadmap as you progress. Number three, capabilities to automate, again, AP and AR processes. That's also built into the network. Number four, streamline connectivity and access to many million businesses through the interoperability methods that the network provides. And number five, to wrap it up, doing all of this with the backing and experience of major partners like the many ERP providers that we work with day in, day out, but of course, key partners like Deloitte, who we work with side by side in many different situations to continuously streamline and accelerate the end-to-end implementation process, no matter what enterprise systems you are using. So perhaps you want to elaborate on that, Hayati, but I think this is also where it all comes together in terms of the end-to-end process.
Yeah, but I think Bertrand, just kind of like a wrap up before we hand it over to Richard for the Q&A is true. Like the way that we work is pretty much, as I said earlier, is three in the box with a client, with Pagero, as well as with Deloitte, who's providing a lot of the advisory, not just on the advisory on some of those regulated or mandate from the tax advisory, but also advisory on this process improvement and the governance, the policy, and the data as well. So we're talking about three in the box, with Pagero providing the technology and Deloitte providing the the system integration side or the process integration side from compliance as well as the process improvement, and then of course with the client as well. So it's kind of like working together side by side. I'll pass it over to Richard to actually be select a few Q&A.
Okay, thank you very much to you, Haryati, and Bertrand and Nazar. Then very detailed covering of the scenarios. We have a couple of minutes left, I think, for questions. So I think we'll go quick fire, and we'll go that way around. So quickly to Bertrand, e-invoicing, is it mandated in New Zealand?
No, there is no hard mandate currently in New Zealand or in Australia for that matter. But both authorities are taking steps to incentivize and accelerate utilization. You could argue it's becoming mandated on the government side, but I won't elaborate too much because we don't have time.
Excellent. Thank you very much. Haryati, a question for you. Are we going to see a delay in the Malaysia rollout given the timeline and the work that needs to be done?
So at the moment, LHDN or RBM is still going to go ahead. I know it's not the answer that everyone is looking for, which is, with the 1st of August being the large taxpayer. We'll know further as we get to the closer, and the only bodies can actually delay is the Ministry of Finance. So in a nutshell, it still stays as what it is, 1st of August. It might not be the answer that everyone is looking for, though.
Thank you, Haryati. Nazar, I'm not sure whether you can do this answer quickly, but there was a question about what PEPOL actually is. Why do we keep talking about it, and why is it important?
So, given the short time, I think try to see PEPOL as Visa or MasterCard, which is set of rules, set of standards that can be adopted by multiple banks all over the world to seamlessly enable exchange of data irrespective of the backend system. This is what PEPOL is, and the PEPOL CTC is a version of it which enables the governments to tap into this data exchange as seamlessly. And we see more and more governments, maybe not so much yet in the Asia-Pacific region, but globally, there's a trend on adopting or moving into PEPOL and PEPOL CTC approach.
Wow, thanks, Naz. You did do it, Nazar. Very good. Okay, that is all we have time for, unfortunately. Thank you for your other questions. We will look at them, and we will endeavour to get back to you with those questions. Haryati, Nazar, Bertrand, thank you very much. Special thanks to all of you in the audience who were able to join us today. Please do fill out the short survey that will pop up onto your screen momentarily. Let us know what you think of today's program. If you joined us late, the presentation will be archived for future viewing. If you feel others would benefit too, you can share the webcast via the share this icon or have them visit the Dbriefs website. I mentioned already we'll respond to all of the questions submitted in the next couple of weeks. Also, if you have other questions or comments, please do reach out to me or the other speakers directly. We'd be more than happy to talk to you. And lastly, from all of us at Deloitte and at Pagero, thank you for your participation today in Deloitte's Asia Pacific webcast. Goodbye.